Okie dokie. Right, so yeah, first of all, good evening, everybody. Thank you very much for taking the time to listen to this evening's webinar, Selling Your Pharmacy and How to Unlock Its True Value. My name's Simon Wills. I'm the Events Executive at the MPA, and I'll be hosting this evening's webinar. Your presenters will be Paul Street, who's the Senior Pharmacy Consultant at Hutchings Consultants, Alex Robson and Laura Dobson, who are solicitors at Clarke Mairs, and Atif Butt, Senior Accountant at Hutchings Accountants. I'm just going to briefly go through just a few technical things just to explain how this evening's webinar is going to work so you can get the most out of it. So the chat is turned off, but we'd encourage you to send all your questions in via the Q&A function, which you should find at the bottom of your screen. Please send your questions in throughout the presentations. The hand raising function has also been turned off just to allow our presenters to get through their content, but we'll aim to give you some time towards the end to answer answers. So as I say, please do send those in. If you have any technical problems at all throughout, just ping me a message via the Q&A. I'll be in the background to help if you need it. But otherwise, I'll continue with our introduction. So each of our presenters will explain their role in the process of a pharmacy transaction and advise you how you can achieve the best price possible from your sale. To start off with, Paul will cover areas such as the current market, some common issues that can arise when selling and the different stages involved in taking a pharmacy business to market. Alex and Laura will take you through what's involved in the legal process, and Atif will advise on how you can maximize the proceeds of the sale in a tax-efficient manner. During the web presentations, we'll have several polls running, so please do respond to those. It's great to have your feedback on those, and it'll be a very simple tick box exercise to do those. And with time allowing, as I mentioned, we'll have an opportunity at the end to put some questions to our panel. But without further ado, I will pass you on to Paul Street. Over to you, Paul.
Lovely. Thank you very much, Simon, and welcome to everybody. So the three presentations this evening will explain the process involved in selling your pharmacy business from valuation through to completion. I'll also look briefly at some of the key common issues that you should be aware of which can affect the value of your pharmacy. The knowledge and advice we're sharing with you has the overall theme seeking to minimise your stress during sale, maximising the price you eventually walk away with. You can be assured that Hutchings Consultants, Clarke Mairs and Hutchings Accountants have years of knowledge and experience in pharmacy transactions and understand how pharmacy sales should work. For those of you who have not sold through Hutchings Consultants before, I just wanted to briefly explain that we are the largest independent pharmacy-only agent in the UK. Our typical sales will range from single pharmacies with a turnover of around £300,000 up to small groups with around £100 million turnover. We're approved and recommended by the MPA to its members for the selling and buying of pharmacy businesses since 2005, and are currently the only MPA supplier to reach platinum status. We have an excellent reputation in the sector, and we only work for you, the seller. We're very clear on that. For example, we don't take a referral fee for introducing buyers to finance brokers, for example. So therefore, there is a zero risk of a conflict of interest arising during a sale, which could potentially create an issue. Overall, we have a wealth of knowledge and a broad range of experience in selling pharmacy businesses. This enables us to provide you with an insightful view of current factors affecting the market. Before I move on to explaining the process of valuing and selling the pharmacy business, I'd like to briefly share with you what we've experienced in the market over the last 12 months or so, and run through some key business performance indicators. Despite the wide-ranging challenges thrown up due to COVID-19, the market has remained buoyant since the start of the pandemic in early 2020. Pharmacy has fortunately been viewed by many buyers as a relatively safe haven to invest in when compared to other more volatile sectors. New buyer registrations rose significantly in 2020 and almost doubled when compared to earlier years, although over the last 12 months, figures have returned to more steady levels. We've been approached by potential buyers from outside of pharmacy keen to invest, although the vast majority of completed deals have been agreed to buyers already operating in the sector. The number of pharmacies coming onto the market fell in 2020 and early 2021, as many owners were either too busy dealing with the fallout from COVID, or they may have wanted to understandably take advantage of the increased income generated. However, this has changed in the latter half of 2021, as many owners finally found some breathing space to contemplate a sale. In fact, overall, we saw a 47% increase in pharmacy instructions in 2021 compared to the previous year. Most notably, in the first quarter of this year, we've seen a massive 63% increase in seller instructions compared to the same period in 2021, highlighting further the point that sellers are returning to the market in significant numbers. For those buyers requiring bank lending, the major banks who traditionally lend to the pharmacy sector have remained supportive, although they have tightened their lending criteria and they're heavily scrutinising lending applications. Several new lenders have come into the market, increasing the choice for those requiring bank support. I'll now move on to run through some of the key performance indicators of most interest. You will see over the next few slides that in order to provide a benchmark comparison, I've quoted UK-wide figures in addition to Scottish, English and Welsh sales statistics for sales completed since January 21. As a guide, pence in pound figures provide a broad overview of prices that are being paid for each pound of turnover. You will see from this slide that average pence in pound figures for sales in Scotland are currently outperforming those in England and Wales by some distance. This perhaps reflects the low supply of pharmacies for sale and the high demand from buyers north of the border. Due to high values in the Scottish market currently, many buyers are switching their search to other parts of the UK, although at this stage, not in significant numbers to make any impact on prices. Broadly speaking, average prices have improved across all parts of the UK over the past 12 months. The wave of smaller, less profitable pharmacies offloaded by the multiples and larger groups seen over the last few years has now passed, and more profitable pharmacies are starting to appear in the marketplace. This has led to an improvement in the average figures, although proportionally, these are currently dispersed across all regions of the country. I must stress that these figures demonstrate the average price achieved. So every pharmacy business sale is individual and we treat it as such. So there will be sales that achieve a higher price and there will be sales that achieve a lower price than the figures that you see here. This next slide shows the average number of offers received per sale. You will see on average there have been more offers per sale in England compared to other parts of the UK, which given the high volume of sales and buyers in the marketplace is not necessarily surprising. This may also reflect the increased number of better geographically located pharmacies, such as in the larger cities, entering the market for sale, resulting in more competition between buyers bidding to secure the business. This next graph shows the multiple of EBITDA, also known as the adjusted net profit achieved on completed sales. As you can see, Scotland once again outperforms other parts of the UK by some way, reflecting the desire of buyers to acquire. An important key performance indicator for both sellers and buyers alike is the gross profit percentage margin the business is achieving. Over the last few years, we've seen an improvement across the board in average margins. This reflects the hard work invested by many owners who've recognised the need to focus on this area during these challenging times. With contracts moving across more to the provision of services and less focus on dispensing reimbursement, it'll be interesting to see what effect this will have on margins going forwards. So, which group of buyers are the most active in the marketplace right now? Since the start of the first lockdown, we've experienced a sustained increase in buyer activity, which has been very reassuring to see. Around 77% of new buyer registrations in the last year have been first-time buyers. This has been a consistent trend now for a number of years. At the start of the lockdown in 2020, we had a wave of buyers register from outside of pharmacies seeking a secure investment. This wave has largely subsided, and the vast majority of sales continue to involve buyers already operating in the sector. Group owners are more active when the right opportunity arises, and some of the corporates and multiples have started buying again, having trimmed poor performing branches from their portfolios. All categories of buyers are making offers, creating more competition, which as a seller you want to encourage. For the right opportunity, buyers are prepared to look at buying outside of their immediate geographical area. As I mentioned, we've experienced an increasing amount of buyers based in Scotland seriously looking at opportunities in the rest of England. We've also seen many buyers based in England looking at opportunities in Wales, which has benefited from a comparatively better supported pharmacy sector. This applies to all types of buyers, from first-time buyers right the way through to the multiples. Crucially, the increased competition between buyers can strengthen a seller's negotiation when it comes to buyers making offers. and helps us provide and secure a better price at sale. To demonstrate the buoyancy in the market, I wanted to quickly show you some examples of recently completed sales from across the three nations. For confidentiality reasons, I'm unable to divulge too much information, but the first example is a Scottish pharmacy located to the east of Edinburgh. This had a turnover in the region of 1.8 million and dispensed around 10,300 items per month. Following a period of marketing, we received 5 offers and eventually accepted an offer from a group owner more than £700,000 over the marketing price. This sale price achieved equated to a pence in pound figure of £2.20. This next example is a pharmacy based in South Wales, which had a turnover of around £360,000 and dispensed around 3,200 items per month. We received, again, 7 offers and agreed the sale to a group owner at £130,000 over the marketing price. This equated to a pence in pound figure of £1.06. This final example is a pharmacy based in South East England, which had a turnover of around £550,000 and dispensed around 4,650 items per month. Again, we received 7 offers for this pharmacy and agreed a sale to a first-time buyer at £70,000 over the marketing price. This equated to a pence in pound figure of £1.11. As we look ahead into 2022, it's very hard to predict the market and what will happen to goodwill values going forwards. At the current time, we are achieving good prices, and whilst we anticipate more pharmacies coming onto the market compared to last year, we're not predicting an oversupply of pharmacies at the moment. There are some headwinds in the economy and wider world right now, which may possibly have a knock-on effect on sale values, such as the geopolitical situation, rising business costs and staff costs, not to mention pressure on interest rates and increased loan repayments. However, there are also positives, as the pandemic has created newfound respect for the pharmacy sector at both a governmental level and in public minds. The banks continue to lend to the sector, enabling the market to keep moving. And we've seen a higher proportion of more desirable property pharmacies entering the market for sale, retaining buyers' interest in acquiring. Overall, all of the above factors feed into creating some uncertainty at the current time. If you are considering selling, I would encourage you to contact Hutchings and speak to either myself or one of my colleagues. Once we have a better understanding of your individual position, we can share our recommendations personal to you. So that concludes the brief overview of the current marketplace across the UK. I'll now move on to explain the steps involved in taking a pharmacy business to market from valuation stage right through to completion. Before we can start the marketing, it's important to establish a value for your business and recommend a marketing price. A competent agent needs to understand your business before they can advise you and will need to gather financial information from you to understand the value. This is an example of the information we usually require. We don't wish to overburden you, but the more information we have at this stage, the more accurate we can be with the valuation. This will reduce the risk of disappointment for you when offers are called in. We review all the information supplied and produce an adjusted profit and loss. This establishes an EBITDA figure. We then calculate the value by adding a multiplier to this figure, and at the same point consider any other factors that can affect the value. There are many factors a competent agent needs to consider when valuing a business. This slide shows just some of the main factors, but there are many more. For example, wholesale income and private scripts income have a defined monetary effect on value. Other factors, such as the level of competition in the area or business potential, are harder to define, but still need to be considered. We're sometimes asked by potential sellers to value their business based on just the turnover alone or item numbers. We're usually reluctant to do this as it can lead to misleading figures. To provide a credible valuation for you, a professional agent will always require a certain amount of information to understand your business. Most sellers understandably want to achieve the best price they can when it comes to a sale. You've worked extremely hard over the years to make the business a success, and it's important to feel rewarded for this when you hand the reins over to the new buyer. As you've seen, there are a large number of factors that can affect the valuation. Many owners ask us which areas of the business they should focus on to increase its value. For most pharmacies, there are 4 key areas to focus on as they can impact the saleability and value of the business. Firstly, gross profit percentage margin. As previously mentioned, this is at the forefront of buyers' minds when looking to buy a pharmacy. As you saw earlier, the average margin currently is around 32 to 33%. A slight increase in margin can potentially add significant value to a business. Take, for example, a pharmacy with a turnover of £750,000 and a gross profit margin of 30%. An increase of just 1% in margin could potentially add around £50,000 to the value by the time a multiplier is added to the net profit, assuming costs remain the same. Many of our clients advise us they're devoting more time to the buying side of the business and spending more time on researching the best prices. Working hard to improve your margin will be time wasted if you allow your business costs to run out of control. If you are planning to sell, it's so important to keep a tight rein on costs. Both the buyer, their accountant, and lender will scrutinise your profit and loss. Staff pay increases and ongoing bonuses, for example, will affect your bottom line, particularly if they're above the industry norm. I can think of one particular sale I had where my client had rewarded a long-standing member of staff with regular bonuses, quite significant bonuses over the years, without considering the impact on his bottom line and potential sale pricing in the future. I'm not suggesting you don't reward staff, but recommend you keep an eye on your costs, particularly in the run-up to a sale. Item numbers. Even though the remuneration contract is encouraging the provision of more clinical services, these are still hugely important in the marketplace. Buyers are attracted to busy pharmacies with strong increase in item numbers. I appreciate if you are planning to sell, this may not be an area you wish to focus on, but it will increase the saleability of your business when you eventually do come to sell. Finally, pharmacies operating on a lease basis should ideally have around 15 years remaining on the lease at the point of marketing. Banks usually match the term of the buyer's loan to the remaining term on the lease. So if you have a short lease of, say, less than 10 years remaining, this can present an issue for a buyer obtaining the bank support they need. An experienced owner with a good relationship with their bank may find it a little less problematic. Nevertheless, the lease should be considered for renewal if less than 10 years if possible. If you feel this could be an issue for you, do speak to us before approaching your landlord, as we should be able to guide you on the best strategy around this. So coming back to what's next in the process, we have the confidential meeting. This is an opportunity for the consultant to meet you and spend some time understanding your objectives and discussing any concerns you may have. The meeting normally takes place at the premises once the staff have left the day. This allows us an opportunity to view the premises without unduly alerting staff. Alternatively, if this isn't possible for any reason, we can conduct a mystery shop exercise and meet you off-site at a suitable venue. During the meeting, we discuss and agree the marketing strategy, and it's another opportunity to answer any queries you may have. So the next step in the process is preparing the sales literature. Our sales brochure is designed to be eye-catching to potential buyers and covers the most salient points of the business, demonstrating profitability and potential. The objective is also to provide sufficient information to buyers at an early stage in order to reduce the volume of questions they may ask. Marketing only commences once you've reviewed and signed off the final document and are happy to move forwards. Unless otherwise specified, a confidential listing is usually added to our website, as this generates buyer inquiries, but we take care to avoid disclosing the exact location of the pharmacy for sale. We also prepare a separate financials pack, which includes copies of the accounts, FP34s, VAT returns, OTC figures, and a copy of the lease if that's applicable. Before moving on, I wanted to talk a little bit about the different sales strategies we use to generate buyer interest. As I mentioned, we always discuss and agree with our client the most suitable strategy to use prior to the start of the marketing. The most common strategy we use is a full marketing approach, but occasionally we will recommend to clients a more discreet off-market approach is taken. Whichever approach we take, only potential buyers who have registered with us and signed our non-disclosure agreement are contacted. With a full marketing approach, an initial shortlist of buyers is created from our database of several thousand registered buyers. When researching these buyers, the consultants will look at who's active in the marketplace currently, viewing, making offers, as well as who we believe actually have the funds available to them. The consultants will also discuss the sale with other team members to seek the recommendations of those colleagues. Potential buyers then receive the memorandum of sale, followed by the financials pack if they're interested. The buyers are followed up and viewings generated as a result. We keep the marketing under constant review, and the buyers list can be quickly expanded if necessary. Where we've identified an opportunity for an off-market approach, we will discuss and agree the process with the seller. A direct approach is made to the selected buyer or a handful of selected buyers who we believe could potentially have a strong desire to acquire the business, should they be made aware of it. If they're not already registered with us, we'll request they formally do so and sign a non-disclosure agreement before they receive any information. Once the NDA is signed, they initially receive the memorandum of sale followed by the financials pack, if they have a further interest. During the discussions with the buyer, they're made aware that they have been given an opportunity to acquire the business before it hits the open market and should therefore make a strong offer if they want to secure it. If for any reason we're unable to come to an agreement, we can quickly revert to the open market approach. As mentioned earlier, this strategy is only appropriate in certain situations and is only recommended when a suitable opportunity has been identified. With the full marketing strategy, the period of marketing where viewings are taking place is usually around 6 to 8 weeks on average. As each pharmacy sale is different, the marketing period can sometimes be shorter or longer than this, depending on the circumstances. When it comes to buyers making an offer, Hutchings used a structured offer process that has been tried and tested over many years. Occasionally, we may recommend to a seller they consider an individual offer, but in most cases, when we feel it's appropriate to set an offer deadline and call in offers, we will discuss and agree this with our client before setting a date. We use a formal offer template letter to avoid any misunderstandings. This is particularly important with company share sales, as they can usually be more complicated. As part of the process, we request proof of funding and work to secure a deposit from the buyer if their offer is accepted. This is usually no less than £20,000. Following the initial round of offers, we provide some general feedback to buyers before calling in the best and final offers. This allows interested parties to fine-tune their bids and helps increase the competition between them. The competition generated allows us to negotiate the best price and terms possible. Once an offer is accepted, we then move into the legal stage. I won't go into too much depth about this, as both Alex and Laura will cover this area in more detail for you. But we arrange for the buyer's deposit to be paid across to your solicitor, who holds the monies in their client account. The deposit monies are held in accordance with a legally prepared deposit exclusivity agreement, which both the buyer and seller are asked to sign. In exchange for paying a deposit, the buyer is granted a period of exclusivity, whereby other potential buyers are excluded from making an offer. We then issue the heads of terms to all parties involved, including the professional advisors confirming the sale. Our role as an agent then changes from one of marketing to that of sales progression, as we consult with all parties during the sale to ensure the sale is progressing forwards. Once an offer is accepted, an average timescale to reach completion is around 4 to 6 months. However, there are many factors that could slow this down, such as COVID-19, bank delays, the NHS change of ownership process, and lease issues, to name but a few. As I come towards the end of my presentation, I wanted to briefly highlight some of the key issues for buyers which can adversely affect the sale and even the final purchase price, which you as a seller should avoid if at all possible. This slide shows some of the most common issues that arise, but by no means covers them all. I will highlight 3 of the most common issues that tend to arise. For example, we often see accounts which are inaccurate. This can have a detrimental effect on a buyer's confidence to proceed or pay a premium price, as well as impact the lender's willingness to lend. I recently valued a pharmacy business which at first sight had just a 14% gross profit margin due to the way the accounts were presented. On closer inspection, the margin was actually 30%, making the business a far more attractive proposition to buyers and thus increasing the value. An experienced pharmacy buyer should be able to decipher the accounts, but a first-time buyer, for example, may not and could just discount the opportunity altogether based on first impressions without taking advice. A common error in accounts we quite often see is when locum costs are inserted into the cost of sales instead of appearing under expenses as with other staff salaries. This simple error can distort the gross profit percentage margin, making the business appear less attractive. This can potentially result in a lower offer from buyers, or in worst case scenario, no offers at all. It's important that your accounts are presented as accurately and easy to understand as possible to avoid creating any uncertainty on the buyer's behalf. Another common issue that can occur is when a seller employs new or additional members of staff after a sale has been agreed. Whilst you must continue to run the business up until completion, it's important that buyers are consulted about staff changes, as extra staff costs could impact their funding or business plans post-completion. Without consulting with them, you could leave yourself open to a buyer possibly seeking to renegotiate the sale price. The final issue that can cause a significant problem is where either in the run-up to a sale or during a sale, expensive contracts are renewed. An example could be for new computer hardware or software systems. A new owner may wish to incorporate the pharmacy into an existing system they currently use, or may prefer an alternative provider for other reasons. But ideally, where possible, these decisions should be delayed or taken in consultation with the new incoming owner, who will be responsible for the ongoing costs post-completion of the sale. When considering selling, it's important to appoint an agent who can provide guidance, support, and is prepared to work hard to achieve the best outcome for you. The team at Hutchings Consultants and our sister company, Hutchings Accountants, strongly believe that we have the necessary expertise, knowledge, and skills to manage your sale and achieve the best price the market will pay for your business. At Hutchings, we have a close-knit team who have over 130 years combined knowledge and experience selling pharmacies. We take pride in the service we provide to our clients and work hard to achieve the best outcome for them. Our experience ensures we can oversee your sale right from the start through to completion. Although we regularly travel around the UK, our team is based in one central office, which allows us to quickly share intelligence on buyers and the current market. We collaborate closely with our colleagues at Hutchings Accountants. If an accountancy-related issue arises during the sale, we can quickly call upon their specialist accounting expertise for advice. So many times, their valuable assistance has helped keep the sale on track, which otherwise might become unstuck. We have a large database of potential buyers who have registered from across the UK. They range from eager first-time buyers through to the multiples, who we have strong contacts with. This allows us to attract potential buyers for a pharmacy very quickly. Finally, we have a straightforward no sale, no fee agreement. There are no upfront marketing costs at all, and we only receive our commission once your sale is completed. We're clear we only act for our client, the seller. This is important, as you can be assured when selling through Hutchings that when a buyer makes you an offer, all the funds they have available are going to you and none are reserved for the agent. So that concludes my presentation for this evening. If you'd like to discuss a potential sale, please do not hesitate to contact me or my colleagues. We can offer you a free verbal valuation and a free tax review. And we can also arrange a confidential meeting with either myself or one of my fellow consultants at your pharmacy. I'll now hand you over to Alex and Laura of Clarke Mairs, who will explain their important role in the sale of the pharmacy business.
All right there, guys. So thanks again, Paul, for that enlightening first talk and the introduction. As Paul says, I'm Alex Robson. I'm an associate solicitor at Clarke Mairs Solicitors. I specialise in corporate transactional work, and particularly the sale and purchase of pharmacy companies and businesses. I have my colleague Laura Dobson on as well, albeit she's not going to be talking at this point, but she is in reserve in the background for any queries that relate specifically to property. So as I specialise in corporate, Laura specialises in the property aspects. And we'll hopefully have a bit of time left over at the end of the presentation to answer any questions you may have. Just in terms of what I'm going to talk about today, I've got sort of 5 distinct sections of my presentation. The first one is talking about the preparation of the sale. Second is sales structures available to you and the legal options. The third is what we do during a pharmacy sale and the documents, etc., that we will be dealing with. The fourth is what you can expect post-completion. And the fifth is common issues which you may encounter during a sale, common legal issues. The brief for the presentation is obviously selling your pharmacy and maximising its value. Obviously, the maximising of the value is more for Paul and Artif from Hutchings Accountants to talk about. What I'll be talking about is mostly actually achieving a sale and what you need to do. Okay, so first slide, preparation for a sale. I think out of all of the slides and everything that I'm going to say this evening, preparation for a sale, this is probably the most important one. And I just cannot stress enough how important preparation is when you're coming to sell your pharmacy business or your pharmacy company. I don't know if you've heard of the old saying of the 6 Ps, prior planning and preparation prevents poor performance. Cheekily, I'll say 7 Ps. If you've got any family or friends with a military background, there might be a rude word that gets added into there. But it's true, particularly when you're talking about selling your pharmacy business or company, the preparation that goes into the sale is the most important bit. And if you do your prep, you will have a successful sale and it will go well and it will go smoothly and quickly. If you don't do your preparation, you're going to have some problems. We say at the top of this slide to engage advisors early. I think that's very important. If you can get a chat with your accountant, particularly if you're a few years away from a sale, they can talk to you about tax, planning for your sale, etc. And then lawyers, if you're sort of 6 months or before you're on the marketing stage, have a chat with lawyers, see what you can come up with. When we act for sellers, one of the things we recommend is you speak to us as soon as you can. We will then talk to you about due diligence, which I'll come on to. Again, having that process started as early as possible gives us a chance to find any problems that buyers may have with the pharmacy that you're selling, and potentially gives us time to fix it before we're in the throes of negotiating documents, etc. In terms of working with your advisors, unfortunately, we, despite being, lawyers and thinking as clever as we are, we can't do everything for you. So you are going to need to engage at various stages. Again, the due diligence aspect of this is probably the most important, and you are going to unfortunately need to spend a good few hours going through a long due diligence questionnaire, liaise with us on aspects of it, but need to put that work in. If you have any lending currently, which usually lending comes with security, so you might have a bank loan or whatever, and the bank has a debenture or a charge, you need to start speaking to your bank about getting that released. And ultimately, I think for sellers, and this is something which occurs quite often, sellers can be surprised at how much work we will ask them to do. Be prepared and understand that this is a process that requires your engagement as a seller. You are going to need to do some work, unfortunately. Moving on, sales structures. The sort of simple answer is there's 2 types of sale that you can have, a share sale or an asset sale. Obviously, you cannot have a share sale unless you operate your pharmacy business through a limited company. If you do, then you may have the choice. I think out of the 2, a share sale, despite the fact that you're selling your company, is a bit easier in the sense that you don't have to involve the NHS. You sell your shares in your pharmacy company and the buyer buys them and carries on the company as it currently stands. If you are on the asset sale side, you will need to, your buyer, sorry, will need to go to the NHS and ask them for consent to sell the pharmacy. That process takes a very long time. You will need to get that process started as early as possible. And hopefully the buyer will instruct somebody who knows what they're doing and will help them out with that. I've made a point here at the bottom where both structures are an option. Accounting and legal advice should be sought. I mean, it's absolutely true. And I suppose the emphasis is on accounting advice, actually. The legal advice is probably secondary. If you could either sell by a share sale or an asset sale, you need to be speaking to somebody like Artif, who can tell you, yes, if you sell by this way, you will have more proceeds than if you sell it the other way. So in terms of the initial process, Paul's touched on this, so I won't labour the point, but we'll have some heads of terms, which will set out broadly how the transaction is going to go ahead. There'll be a deposit agreement. Hutchings, as your agents, would agree that with your buyer. They have a standard form for that, and it's basically your buyer putting up some money, and in exchange, you agree that you will take the pharmacy off the market. Very standard. And confidentiality agreements. I suppose as seller, this is probably one of the most important preliminary documents for you. If you are sharing confidential information about your business or company, you want to make sure that the buyer is not going to do anything untoward with it. So we will deal with all of that for you. Then we sort of get into the more fundamentals of the legal process. I've already talked about due diligence, and again, my advice, start it as soon as possible. Start getting the information that your buyer needs. As I say, we say get in touch with us as soon as you can. What we do when we act for sellers is we produce a due diligence questionnaire, which they're broadly standard across all the firms, but there's sort of questions and answers for you to fill out. It will take some time, unfortunately, for you to answer this, but if you put the time in and you put it in early enough, it could shave months off the time it takes you to go from start to finish with the sale. Fundamentally, what you are doing is giving the buyer all of the information that it needs about the company or business which they're buying from you. And I suppose with due diligence, the important thing to do is to flip it around. If you were buying a new business or company, what would you want to know before you came in? You wouldn't just agree to give a buyer hundreds of thousands, potentially millions of pounds, and sort of just get the keys and walk in. You'd want to know quite a lot in advance. So yeah, it requires you to put some work in, be as detailed and accurate as you can, and we will work with you to deal with this part of the process. We then have the legal documents. I'm not going to labour the point about these because we as your legal advisors would obviously take the reins in these, but you'd probably be surprised at how much documentation we will generate during this process. The purchase agreement in particular is likely to be between sort of 60 and 120 pages long, a contract. We then have a disclosure letter where we tell a buyer any nasty stuff that they ought to know in advance. And then ancillary documents, certainly from my perspective, board minutes, resignation letters. These are all things really which are just there to sort of dot the I's and cross the T's. Property documents, I don't want to say too much about because it's not my specific area, but we will need to deal with a property in some respect on every transaction because obviously your retail pharmacy will trade from a property somewhere. Whether that be a sale of the freehold or a lease, we will need to come to that and look at it as your advisors whilst you're selling. Again, Paul's touched on this, but one of the key issues we come across is where the property that you operate your pharmacy from is leased. That lease needs to be suitable for the buyer who is coming in, and if they're getting bank funding, it needs to be suitable for their bank. So that's part of the process we'll deal with for you. Employees, again, not going to say too much about this. We'll need to give the buyer information about the company's employees or the business's employees, which we'll do as part of the due diligence process. If you're selling by way of an asset sale, we need to think about TUPE, transfer of undertakings. Basically, you need to make sure that we comply with that so there's no sort of nasty liabilities or whatever arising out of it. The actual practical completion says there in the presentation, waiting for the cash. If only it was as simple as that. We, as your lawyers, will be handling the money on your behalf, receiving money from the buyers, solicitors, etc. But in practical terms, you will have to do a physical handover. There's no fixed way of doing this. I mean, I've had clients who've done a handover and they've gone in at 9 a.m. on the completion day, chucked the keys at the buyer and gone home. I've had other clients who've spent 5 days, 10 days with the buyer, showing them the ropes and sort of helping them out. And indeed having consultancy arrangements or longer term arrangements afterwards where they actually, despite the fact they've sold their pharmacy business, they work for the buyer for a short period. Post-completion, if you are doing an asset sale, you have what's known as apportionment. These are basically dealing with periodic costs. So you may have a PMR system that you complete halfway through a month and there's a monthly payment, or it's paid for quarterly. So you deal with who owes who what. Completion accounts are a different aspect on share sales only. They're more artif's bag and more on the accounting side, but basically they bring the company which you've sold to a cash neutral position. And again, we'll advise you in detail as we go through. Now, common issues. I said at the start, these are things which crop up and was one of the things I wanted to sort of really focus on. Now, in terms of the work we do, I'm sort of delivering this presentation to you as potential sellers of pharmacies, but I also act for buyers of pharmacies as well, other side of the coin. And, you know, in both respects, I see the same issues crop up day in, day out. And the biggest one by far is always property. Sorry, Laura, I know that you're not talking and you're watching, but I'm about to slate the property side of things, unfortunately. Very, very often, pharmacy premises are operated from leasehold property, which means that there is a third-party landlord involved, and they can be, they come in varying degrees. They can be an absolute nightmare. What you will need to do if you're doing an asset sale is get your landlord's consent to transfer or assign the lease to the buyer. If you are a share sale, then the lease will remain with the company. But in either case, the lease needs to be in a suitable condition for the buyer. And particularly where the buyer is borrowing money from a bank, it will need to have certain things in without doubt. And I sort of come back to the initial point about preparation. One of the things we suggest is for you to get in touch with us or lawyers generally as soon as possible, because we can look at this and say, well, your lease doesn't have mortgagee protection provisions in, and therefore it won't be suitable for a buyer. We need to sort this out, or we need your landlord's consent to assign this lease. Let's get in touch with them as soon as possible. There are other things that can crop up with property. So another common issue we have, the seller has owns the freehold of the property and leases it to their pharmacy business or the company, but they've borrowed money to buy the freehold. We will need the consent of your lender to grant that lease. Rights of way and other matters affecting title, I won't say too much about that because it's Laura's bag, but again, you know, these are things that we can spot and we can hopefully fix before you sort of get anywhere advancing the sale. Buyer funding, as I say, I mean, buyers borrow money to buy these businesses or companies. It's very rare in my experience, unless it's an existing group operator who's acquiring, that the buyers will be using cash in their pocket. When they're not using cash in their pocket and they're going to Barclays or Lloyds or Wesleyan Bank, that lender who they choose will have an input on the sale. They will want to know many things about the sale, but they will also want to be involved in the documents, etc. And, you know, again, coming back to the point about preparation, we deal with pharmacy sales and acquisitions, and we know all of the lenders, and we're used to the issues that they identify. So, you know, hopefully if you get in touch with us, we can fix those. It's much better to do that before you get anywhere significant in the sale process than it is to try and fix it halfway through. Ultimately, it just leads to a delay. And then final point for me on common issues, NHS consent with asset sales. If you sat there and you are selling your pharmacy company and it only, for example, only operates 1 or 2 locations and you're selling them all to the same buyer, then you can rub your hands and ignore this part. The NHS consent process is unwieldy and it takes a very long time, and it has taken more time since COVID for various reasons, but you can expect it to take sort of between 4 and 6 months now. If you are doing an asset sale, it is something that's going to be a bit of a problem, and therefore, you want to get it started, get the process started as soon as possible. And I think that's it for me. So I'm going to now hand you over to Artif at Hutchings Accountants, and he can enlighten you on the accounting aspects of pharmacy transactions.
Hello all. My name's Artif Butt, and I'm the Senior Accountant at Hutchings Accountants, where we've been specialising in pharmacy sales in the UK for over 30 years. Today we're talking about selling your pharmacy and how to unlock its true value. We'll look at what steps you need to take, how you can best be prepared, and some of the things you'll need to consider along the way to get the most out of the process. We've heard some excellent points from Paul and Alex on coming to market and the legal aspects of the sale, and now I'll be focusing on accounting and tax matters, so you can get a comprehensive idea of what you need to be thinking about and when. We'll be covering preparing for sale, pre-sale issues, due diligence, the legal process, legal completion, completion accounts, and what happens after completion. Let's start by talking about the first step, preparing for sale and understanding your tax position. Now, if you're thinking of selling your business in the future, it's never too early to start getting ready, as Alex has told us, even if you don't plan to sell for many years. Being properly prepared can make a huge difference in not only the price you eventually get, but also how much you're left with after paying the taxman to enjoy in your retirement. This has never been as important as it is now, with a number of risks and uncertainties facing the pharmacy sector and beyond. Now, we've all seen how the COVID-19 pandemic has changed our lives in a way that would have been unimaginable a couple of years ago. And even though we've seen restrictions wind down across the country, it's far from clear that this is over, and it's reasonable to expect that it will continue to have an impact on us for some time to come. Recent events such as the UK's departure from the European Union and the current war in Ukraine have contributed to rising costs in a number of areas, and the Office for Budget Responsibility forecasts UK inflation will average 7.4% this year. With the economy facing such an unprecedented challenge, we're also likely to see changes in tax rates and reliefs coming in the near future. With measures introduced to keep the economy afloat costing hundreds of billions of pounds, the government still needs to find ways of increasing its revenues. The Chancellor has commissioned a review on capital gains tax, which is an obvious choice for the next target for change, as it's currently charged at lower rates than income tax. The government made significant changes to entrepreneurs' relief 2 years ago, which I'll talk about later, and it's possible that we might see further changes to come in the near future, or even the relief being abolished completely. Sector and market conditions. Paul's talked about the current state of the market and how it's been affected by current events, but as we've seen, there are a number of factors that can change things significantly over the coming years. Of course, it's impossible for us to predict the future, but the best way to manage these risks is to be prepared. Once you've decided you want to sell your pharmacy, be sure to get specialist advice that takes your individual circumstances into account. This will help you work out the best strategy for the eventual sale, having considered the accounting, legal, and marketing perspectives. At Hutchings Accountants, we start by reviewing your accounts and tax position to recommend the most tax-efficient way to structure your sale and extract the profits. Getting this right can have huge implications that could make a difference of hundreds of thousands of pounds to your tax bill. So it's really important to look at this as early as possible, as getting the best tax treatment sometimes involves making changes to the business years in advance of an eventual sale. If your pharmacy is trading through a limited company, the sale can be structured as a share sale or an asset sale, as Alex explained earlier. To decide on the right structure for a company sale from a tax point of view, we calculate what your tax bill would be from each option, as there is a considerable difference in the tax treatment. A share sale means you'll be taxed personally on the gain and pay capital gains tax, whereas with an asset sale would mean the company selling the business and paying corporation tax, and you potentially being subject to a further personal tax charge when you take out the profits. If you are considering a company share sale or personal asset sale, you may qualify for business asset disposal relief, formerly known as entrepreneurs relief. So business asset disposal relief is a relief that can apply when someone sells part or all of their business and means you only need to pay tax at a rate of 10% on the gain if certain conditions are met. Each individual has a lifetime limit of £1 million worth of gains that can qualify, which has recently been reduced from the previous lifetime limit of £10 million. In a share sale, the qualifying conditions are that you need to hold at least 5% of the shares and voting rights and be either an employee or officer of the company, which must also be a trading company. These conditions have to be met for at least 24 months before disposal. So without BADR, if you were to sell your business for £1 million, you'd be liable to capital gains tax at 20%, which is £200,000. But if you qualified for BADR, this would be reduced to 10%, meaning you'd only need to pay £100,000, which is a huge saving. However, there are circumstances where you may not qualify for relief. For example, where you're trading through a limited company which also owns investment assets such as shares or property, or which has too high a level of cash at the point of sale. It's important to identify any problems as early as possible so you can then take the necessary steps to remedy them. If you are considering selling your pharmacy in the next few years, we recommend you take advantage of our Roadmap to Sales service, which is aimed at pharmacy owners who would like to increase the business's value before they sell. Using an initial valuation prepared by Hutchings Consultants, we identify the key performance indicators affecting the value and look at how these could be improved. We also look at any issues picked up in our review of the accounts and tax position to work out the steps necessary to resolve them to ensure you get the most favourable tax treatment when the time comes. Finally, we map out a list of prioritised targets of what we want the business to achieve and a timeline over which we want to achieve them. This can be things like reducing stock holding and wastage, improving the business's gross profit margin, reducing staff costs, and making sure the sale will qualify for business asset disposal relief. As part of our Roadmap to Sales service, we use customised management reports to analyse and monitor the business performance each quarter and ensure that you're on track to meet the targets for your improvement. During this time, we also use the management reports to compare your pharmacy to similar pharmacies in a process called benchmarking. These management reports help us to look at how the value of the business is changing as time progresses based on the most recent performance. Twice a year, we review the results and re-evaluate our plan where necessary. That way, we can also factor in any changes in circumstances and revise our targets and timeline accordingly. The aim of this process is to increase the value of the pharmacy as much as possible before it's put on the market. And it's important to remember that every £100 spent on getting the right professional advice can increase the profitability of your business by thousands of pounds, which in turn can increase the value of your pharmacy by tens of thousands when it's time to sell. Now, as we've said, preparation is key, and it's worth looking in a little bit of detail at some of the things that we commonly see in pharmacy sales that can cause problems or present opportunities. We talked earlier about the conditions for BADR. If you have a company with more than one share class, this may need to be looked at as some of the shares may not qualify for the relief at present. Your company also won't qualify if it owns too many investments or holds too much cash, as HMRC would no longer consider it to be just a trading company. The level of cash and directors' loans can have other implications to your sale, which may need to be considered so that it can be dealt with in the transaction. Investment property owned by a company can cause problems with BADR, but we more commonly see pharmacy companies that own the trading premises they operate from. Sometimes these are included in the business sale, but there are also cases where the business owners want to take them out of the company before the sale so they can give the new owners of the business a lease and benefit from the rental income. It's important to take advice on the most tax efficient way to do this, as there are a number of different ways. Another important area that's worth considering early on is what you want to take from the business in the form of salary, pensions, and dividends in the years leading up to your sale. Tax rates on salaries and dividends are generally much higher than the 10% rate you can achieve on a sale with business asset disposal relief. So it makes sense to take less salary and dividends from the business if these are going to be taxed at a higher rate. This will mean the company's cash balance will be higher at the point of sale, and care needs to be taken that it's not so much that HMRC no longer consider the company to be a trading company and the business asset disposal relief is lost. However, it's also important to remember that some dividend income is taxed at 7.5%, rising to 8.75% next month, and even after this increase can represent a tax saving over the rate you get on a sale. So it's well worth engaging in some tax planning in your final years of ownership to make sure you optimize your takings so that you're paying the lowest overall rate of tax on your lifetime earnings. So these are some of the things to consider before a sale, but now let's talk briefly about what happens once you've found a buyer. Alex set out the main aspects of the legal process earlier, and once your potential buyer pays their deposit, the next steps are the due diligence process and finalising the sale agreement. As accountants, our job is to work alongside your legal team to make this all run as smoothly as possible. The due diligence process gets underway and the buyer's accountants request a list of information. In a share sale, the buyers will want to go back over several years so they can be as comfortable as possible about the history of the company. Your lawyers will go through the sale agreement with the buyer's lawyers to agree a finalised version. As your accountants, we would also review this from a tax and accounting perspective, suggest any changes to the main terms and covenants, and carefully go through the warranties to make sure the buyers are made aware of any exceptional events or circumstances. You can see how important it is to engage accountants and solicitors who specialise in pharmacy sales to get this bit right. Because pharmacy is all we deal with and we see so many sale agreements in the course of our work, we know what is appropriate and what is excessive to warrant. And so with our combined experience, we're able to limit your risk. In a share sale, the total amount you receive for selling your shares is made up of the agreed price for the goodwill and fixed assets of the business, and a further adjustment for the net asset position of the business at the point of sale. The net asset position is made up of the company's assets or things it owns or is owed, like cash, stock, NHS debtor and VAT debtors, minus the liabilities or things it owes out, like money owed to suppliers or HMRC. If there are more assets than liabilities, an additional payment is made for the net asset value. But if the liabilities are more than the assets, a deduction is made from the goodwill payment. When the buyers are happy with the results of due diligence and the sale agreement is close to being agreed by both parties, a target completion date is agreed for ownership of the pharmacy to transfer from the seller to the buyer. It's generally helpful if this completion date can be at a month end, as this makes it much easier to calculate the position at the point where the business is transferred. Once a target date for completion has been agreed, we need to provide the buyer's side with an estimate for the company's net asset position at that date, so that they can have an idea of what the total cost will be for their purchase of the company. Of course, we're not able to provide exact figures at this point, so we estimate this as best we can. This estimate then gives the buyer an idea of the net current asset payment they will need to make, in addition to the payment for goodwill and fixed assets. Once completion accounts have been agreed by both parties several months down the line, a final payment can be made for the actual amount due as per the accounts. When we review sale agreements, there are a number of things we look at carefully. For example, the proposed method to calculate the net current asset figure, as this will affect your final payment. The agreement also sets out the terms by which the business must produce the completion accounts and what the procedure would be if the accounts are not agreed by the buyer. We also go through the tax warranties in the agreement very carefully so that we can understand exactly what needs to be disclosed to the buyer, and all these facts are then collated by your solicitor in a disclosure letter. Putting the time in to get this exercise right means you can sign the sale agreement with peace of mind and confidence that your interests are protected. After completion, the next thing we need to consider is completion accounts. These need to be prepared with extra care and attention to detail to make sure they're in line with the sale agreement and also represent the closing position as accurately as possible, so you can benefit from all the profits from your period of ownership of the business without paying for any of the business expenses from after this date. Once the accounts are prepared on this basis, they're sent to the buyer's accountants, and under the terms of the sale agreement, they have a specified period of time in which to inform us of any disputes or to accept the accounts. After reviewing the accounts, the buyer's accountants will either accept them or send a list of any items they believe should have been included or removed from the accounts. For example, payments made by the company after completion that they believe were incurred before completion. We would then go through any points of dispute and try to agree them with the buyers and revise the accounts accordingly so that they're accepted by both parties. The buyer will then release the final balancing payment for the net current assets, which means that you would now have received full payment for your business. The final step is declaring the sale on your personal tax return and calculating and paying the tax due. The sale will fall in a tax year ending on the 5th of April and would need to be reported in your tax return for that financial year. This would need to be submitted and the tax paid by the 31st of January the following year. As an example, if you sold your business on the 1st of January 2022, this would fall in the 2021-2022 tax year, and your tax return and payment would be due to HMRC by the 31st of January 2023. If you were to receive a total of £1 million for your business and its assets, and you paid professional fees of £50,000, your total gains from the sale would be £950,000, and the capital gains tax due on this after the application of your annual allowance and the business asset disposal relief would be just under £94,000. Once we calculate your tax bill, we can also advise you on ways you could reduce it. If you haven't already, you should also take advice on estate planning and your will. It's also worth considering your exposure to inheritance tax or IHT. When you own your business, you benefit from business property relief, which means if you were to pass away, the business assets would be outside of the scope of IHT. But once the business is sold, business property relief no longer applies, and your share of the cash proceeds would be liable to IHT if you were to pass away unexpectedly. We also advise all our clients to talk to an independent financial advisor who can guide you on investments you can make for a tax-efficient income in retirement. And finally, the last thing you'd need to think about is what to spend the rest of your money on. Thanks everyone for joining us and listening today. We hope you found it interesting and informative. We've got some great questions coming through, so I think we can hand back to Simon to look at some of those now.
Fantastic. Thank you, Atif. And yeah, thank you, Alex. Thank you, Laura. And thank you, Paul. Lots of fantastic content there. Actually, it's probably worth mentioning at this point, actually, to our audience that recording of this webinar, the full webinar, will be made available on our website from tomorrow. So if you need to watch back, share it with colleagues or anything like that, then obviously you can do so via the recording. But yes, as Atif mentions, we've got lots of fantastic questions. So I'll start from the top. So excuse me. First question is for Paul. You mentioned pence in pound. However, recently EBITDA multiples have been predominantly how people have discussed valuation. Can you please discuss the change from pence in pound to EBITDA multiples and what is currently used by whom?
Good question. In terms of valuation, in the vast majority of the valuations that we do and carry out, we use an EBITDA method, which essentially is we will look at a set of accounts and we will apply assumptions to those accounts based on our sort of our experience in the marketplace. But we'll produce an adjusted profit and loss, as I mentioned, otherwise known as an EBITDA, and say that that's in the majority of the valuations that we carry out. I think that's in line with most of our fellow agents and also banks as well. They do a very sort of similar undertaking as ourselves in that respect. In terms of the pence in pound, say occasionally we might use that on a valuation. Where that perhaps has been used more recently is, say, as we sort of commented on, sort of, the last couple of years we've had those sort of lower profitable pharmacies coming onto the market. And perhaps when it went for an EBITDA valuation, the value was actually coming out sort of on the lower sort of side, but we knew from our experience in actually on the market, we would expect to achieve a sort of higher price than perhaps the EBITDA valuation suggested. So then we would take into account pence in pound values. What are we sort of seeing being achieved in a particular location or region, for example, and we might sort of move across to a pence in pound valuation in that regard. Pence in pound used to be something that I think many years ago was sort of more sort of predominant when it came to valuation. So as I sort of say, it's not something that we use very often. It is that EBITDA, create the adjusted profit and loss, apply multipliers to it, and as I mentioned, we also take into account lots of other sort of factors around. So it's not literally just a black and white maths calculation. It's very much sort of looking at all the different factors that can come into play and affect that sort of valuation before we give a recommendation to the client, basically.
Brilliant. Thank you, Paul. And actually, while we're on pence in pound, we've got another question here. So do you have any figures for pence in pound in Northern Ireland? One of our audience members. No, I'm very sorry. We don't. We don't really sort of venture into Northern Ireland. Our sales are based around Wales, Scotland, and England. So sorry. Short answer is no. I'm afraid not. Apologies for that. Okay, thank you, Paul. Okay, what percentage of completed sales have had offers above the asking price? Is the next question. In terms of percentage, I haven't got those figures to hand. I would say it would be a very large percentage. I think that sort of feeds into pricing strategy when taking a pharmacy business to the market. I think what we try to encourage, I think, is setting a price at a level to attract interest. I think in terms of when setting the marketing price, it's a bit of a sort of fine balance. I think if you set the price too high, you may just not get the interest or get a very low level of interest. Set the price too low, then obviously you risk underselling the business. So it's all about sort of setting the right sort of level to attract that interest and generate, as say, offers and negotiate with those parties who are offering as a result of that interest generated. So I don't have any stats immediately at hand, but I would say in the vast majority of cases, we do achieve in excess of the marketing prices. And as I mentioned earlier on the average number of offers per sale, that's quite high. And so that's an average. Again, depending on geographic location, you may find that the average number of offers are far higher than that, and the opposite may be also true in other locations. So, but we generally get a good level of interest on all of our pharmacies. Thank you, Paul. Okay, another question. A number of pharmacies have done COVID vaccines. How are these accounted for in evaluation, considering that it affects GP and EBITDA?
Good question. I think at the moment, what many buyers are trying to understand, certainly over the last couple of years, is value on pharmacy businesses. Many pharmacies have obviously seen setting aside COVID vaccinations, but they've seen a big increase in sort of turnover as a result of the pandemic. So generally speaking, I think a lot of buyers are trying to sort of gathering more data on a target business they're looking at to understand actually, is it perhaps a temporary increase in business that may sort of settle down the further we sort of hopefully come out of the pandemic, or is it sustained activity in the business? So I guess generally speaking, we're looking at those figures within the turnover of the business. That's what sort of feeds into our EBITDA valuation initially. And yes, we want to understand when we're speaking to potential sellers, if they're running sort of, vaccination centres, etc., and what level of income they're generating from that. At the moment, it's just something that we're starting to sort of look more in depth in when it comes to the valuation, but it's still, I say, very much turnover and margin that we are looking at. So I think that's something. It's an interesting question, something that will be sort of developed as we go sort of forwards, I think. But as I sort of say, buyers are definitely wanting to get more business information, and that goes back to what I said earlier on about providing really good, accurate accounts. Because as I say, buyers are really keen to not look at just the last 12 months, but go back sort of further and really sort of make sure what they're offering on is going to be sustained for them.
Great, thank you, Paul. Okay, I'll give you a break for a second. Question here for Artif. Artif you said leaving cash in the company. How does that benefit if you're selling the pharmacy, the company? Sorry.
Yep, good question. For the director of a limited company who runs their own business, if you've got money in your company and you want to take it out, there would normally be a tax charge to do so. So, you'd need to do it either as salary or dividend or loan. And each of these things have tax implications. On a sale, when you're selling your pharmacy, if there is cash left in there, effectively you can get the benefit of that because the buyer can use that cash to repay you it. And what it means is it gives you the opportunity to effectively extract it from the company, but at a lower tax rate. So, you'd leave the money in there, you would also get the benefit of it because in a share sale, you'd get paid for the goodwill plus the net asset. So that cash would normally form a positive net asset.
Great, thank you, Arthur. Thanks for clarifying that. Okay, another question. We are contemplating getting a dispensing and MDS robots. Is there any increase in value or buyer demand for pharmacies with these robots?
Generally speaking, I wouldn't say there's necessarily a huge demand from buyers when they're registering with us to inquire if a pharmacy does have a robot installed. However, it can be attractive. I think for many owners installing robots, it's with a view to reducing their staff costs over the longer period. And I think that's a question that sort of buyers certainly look at. That cost and investment, has it reduced those sort of staff costs, or in fact have staff costs sort of remained unchanged really? I think installing a robot is obviously an expensive option to look at. I would question if somebody is looking to sell in the next few years, whether it's necessarily worthwhile going ahead with that sort of project. As I say, that sort of cost may not be recouped. Very much like, for example, the analogy of sort of doing a shop refit, for example. If somebody has that in mind, but they're planning to sell in the next sort of few years, that extra sort of cost, there's no guarantee you'll see a return on that. So I would say if somebody is contemplating installing a robot, have a chat with us. It may be that we can look at carrying out a valuation, get an understanding of perhaps where the value sort of sits, and then that can all be sort of thrown into the cost calculation as well, going sort of forward. So yeah, I think again, every situation is individual. So I would say, speak to us sort of directly. Happy to talk it through in more detail on the phone, and a chance to understand perhaps a little bit more, but behind the question there, really.
Great, thank you, Paul.
I just want to dive onto that, Simon. One of the things I would point out about the dispensing and MDS robot aspect, assuming that you're going to get this on hire purchase, if you are not operating through a limited company and you're operating through some other method, i.e. sole trader or a partnership, I'm assuming that you will enter into that contract either personally or as the partnership. And it may well be that contract isn't readily assignable. When you come to actually sell, you may need to assign it to somebody else. I'm not saying it will cause you an issue, and actually personally I can't recall ever actually looking at one of these contracts because they are quite a new thing, but it's something to bear in mind as well. If it's company, it's less of an issue, but if you are entering into the contract personally, then you don't want to end up being stuck with it. If you do end up stuck with it, then your options when you sell are to pay it off basically, in full, which obviously might not be something that you want to do.
Great, thank you, Alex. And while I've got you, actually got a question here coming for you or Laura. So you said on an asset sale, because of the change of ownership, it might take 6 months. How does that affect both my decision to agree the price if valuation increases over that period and the buyer not rethinking whether they want to go ahead? Can it be tied down?
Well, it's a good point. And I suppose the answer is it depends. Certainly on the valuation side, I think that's probably more for Paul or one of the team at Hutchings to either consider this evening or perhaps come back and consider it afterwards. In terms of tying the buyer down, we've spoken about the deposit process, which Hutchings standard deposit form and exclusivity form provides that the buyer will in effect put forward a bit of cash, and in doing so you agree to take the pharmacy off the market and start negotiations for a sale with them. That has a few effects, but one of the effects is it almost makes them have a sunk cost and an investment in proceeding. It's very rare in my experience, unless there is an issue, that a buyer starts negotiations and then subsequently doesn't then deliver if they do want to go ahead with the sale from the outset. It's very rare that they then change their mind. In terms of valuation increases over the period, again, in my experience, you agree your price and you start negotiations, and it's very rare that there is then an adjustment to the price, especially upwards. There may be a downward adjustment if there is an issue identified which the buyer needs some cash to cover. But for 6 months, I think if you're sat there and your EBITDA goes up 5%, you're not going to then be in a position really to say, well, I want 5% more. There's a number of factors for that, but I suppose probably importantly is the buyer will be is likely to be borrowing money to acquire this business or company from you, and they will have agreed with their lender that they're going to get X amount. If you then say, right, well, I want another 50 grand from you, the chances are, and the reality is, that they're probably not going to have that money anyway. So I think, subject to what Paul may say either now or going ahead, once you've agreed your price, that's pretty much it, unless it either takes an unusual amount of time or something happens to in fact reduce the price.
Yeah, I think just to add to that really, and I agree. I think pretty much with everything that Alex sort of said. It's sort of it's unfortunately the change of ownership process. It's something which depends on which part of the country you're in as to how long it will take. But unfortunately, there have been sort of some quite sort of significant delays. But I think in practice, sellers. Most or vast majority of sellers, once they've entered into the process of agreeing a sale, they just want to sort of move forward, and things like change of ownership are unfortunately largely out of the buyer or seller's control. All you can do is really sort of make sure you submit your applications as soon as you possibly can and chase as best you can. But you're reliant on sort of third parties to sort of process that. And I think the vast majority of sellers, understand that. So yeah, in my experience, it's a case of once the sale's agreed, let's just get the sale completed, and everyone can sort of move forwards.
Great, thank you both. That's great. Okay, I'm conscious of time. We've got lots of fantastic questions coming in, but we could be here for quite some time if we go through all of them. But Hutchings obviously and Co will kindly obviously respond to all of your questions following tonight's event, those that we can't cover. I propose obviously do a couple more. It's great to see our audience is sticking with us, so they're obviously keen to know. So I'll just do a couple of other questions there. Is the Hutchings Accountants input expertise included in the sale commission, or is it separate?
Yeah, happy to answer that one. We are actually a separate company, so Hutchings Accountants is a sister company to Hutchings Consultants. But for all Hutchings Consultants customers, we will do a free accounts and tax review to look at, a potential sale and how we'd recommend they structure it. So that is something that you could say is included in with Hutchings Consultants, but generally we are a separate company, so we have our own engagement and fees, etc.
Fantastic, thank you, Artie.
Simon, sorry,
yes,
so there's a question regarding if a business is sold to existing manager, can the process be simplified?
Okay, yes.
Somebody sort of raised that. That's something that does occasionally come up. I mean, I've certainly been involved in sales where the seller has wanted to give the manager an opportunity to acquire the business. Can the process be simplified? I'm not really too sure about that. I think essentially, I guess by selling the business to the manager, then you're not going through that period of sort of marketing, but at the same time you are perhaps sort of prejudicing what price you actually achieve for the business, because obviously the benefits, or one of the benefits of coming through an agent for ourselves, is that you are opening out the business opportunity to other potential buyers out there. So that obviously may mean if you just go to one buyer with the opportunity, then you may not achieve the best price that the market will pay, and on the best terms. I've been involved in sales personally where the client has said, look, I've got a manager I've worked with for many years. I would like to give them that opportunity, and what we've done in those circumstances, we've included the manager throughout the marketing, right from the beginning, got them involved in the process, tried to assist them. If they, for example, needed help with arranging sort of funding, we can introduce them to finance brokers. So we've done as much to include them in this sort of process. And I can think of one particular sale I had where the manager, they just, they whilst they appreciated being approached, they just couldn't pull together the necessary sort of funds. And by going out to the open market, my client achieved a much better price from a very good buyer, in fact. But as I say, they felt comfortable. They'd given a great opportunity to the manager. Unfortunately, it wasn't to be in that sort of scenario. But really, you've still got to go through the whole sort of process of the manager would have to obtain the funding. There could be the change of ownership process depending on the structure of the sale. So I guess, really it's losing perhaps that marketing period, but at what cost? You could be taking quite a lot lower offer, not having explored what the market's prepared to pay.
Fantastic, thank you, Paul. Okay, has there anybody else got any other sort of specific questions they wanted to put out? I've got one more to ask here, I think, of Alex or Laura, but unless there's any other specific questions, I suggest we maybe close after this question, and then obviously all the rest can be taken offline if everybody's happy with that.
Yeah, absolutely. We can see there's a few good questions in there. We could go on for a while, but maybe what we'll do is we'll come back to everybody individually with answers by email in the next few days. So
fantastic.
Probably, yeah.
Cool. Okay. So I have a lease which has another 12 years left. When I sell, do I walk away from all liabilities? Is our final question.
I'm happy to take this one. It really does depend on whether you've got an asset sale or a share sale. If you've got a share sale and the lease that you've got is held by the company that you're selling, obviously those liabilities are held by the company as the tenant. There'll be sort of various warranties that the buyer will want you to give in the share purchase agreement that really depend on what those warranties are as to, if you're warranting anything in relation to the lease. But, the buyer will, and their lawyer and, surveyors and whatnot will make their own investigations into, they should anyway, in relation to any surveys in terms of what condition the property's in, and they should really make their investigations into sort of any sort of existing liabilities in relation to the lease. If you've got a asset sale, your lease will need to be assigned or transferred to the buyer, and commonly as part of that process, the landlord will ask usually the seller to give what's called an authorised guarantee agreement. And it's basically an agreement between you and the landlord where the landlord is saying, I'm happy for you to assign the lease to the buyer, but what I want is some sort of guarantee from you that if basically things don't go well with the buyer, we've got somebody to fall back on. And that would usually be you. So they might ask you to enter into sort of a similar document to that, which means that your liabilities won't come to an end if you do assign the lease, because you'll be bound by the terms of the authorised guarantee agreement. So that's probably the most common situation where you won't be released from any liabilities. If, however, you are surrendering your existing lease because your buyer wants to take a brand new lease, usually due to the sort of relatively low term left on the lease, it might be more practical to surrender your lease and have the buyer take a new lease. Then we'd be trying to look for you as a seller to get a full release from any liabilities for the under the lease. If there's any subsisting breaches in place, we'd be trying to look for the landlord to give you a full release, and then you could walk away fairly comfortably knowing that they're not going to come back to you for anything. And then obviously it would be the buyer's problem when they enter into their new lease. So it very much depends on what the setup is and what the buyer's looking for, type of sale that it is, as to whether or not you'll have any continuing liabilities even after you've sold.
Fantastic, thank you, Laura. Okay, does anybody else have anything final to add before we wrap things up?
Yeah, Simon, I think just it's probably a good idea, because I just see that a couple of these questions in the chat from anonymous attendees, and that I don't know whether that means will we be able to get their details or not.
No, that is true actually. Yeah, that's a good point.
So, I mean, and I suppose this applies to everyone in attendance, whether or not you're anonymous. If you have any questions or anything, please don't hesitate to get in touch with any of us if it's for any discipline. I certainly, I don't just speak for myself. I know the guys at Hutchings and Hutchings Accountants and us as a firm all have a very similar ethos of being available and being able to pick up the phone and being there to speak to if you want to speak to us. You can find our details on the internet, and I'm sure they've gone out with this webinar, or they will go out. Please just give us a call if you have any queries, and we'll do our best to help.
Absolutely.
Fantastic. Thank you, Alex.
Yeah,
and also, apologies, sorry. But we could also potentially, anonymize the questions and send out potentially a PDF or something with all the questions from tonight for everybody to see. So, even if somebody has submitted an anonymous question, we can give a general answer on that, so people don't miss out. But yeah, that leaves me just to thank our experts. So yeah, thank you, Paul. Thank you, Alex. Thank you, Laura. Thank you, Artif. Fantastic information. And thank you all for joining us tonight. Thanks for engaging with us. And thank you for staying us through till the end. But as I say, the recording of this webinar will be available on the MPO website from tomorrow on the past events page. And as the guys have mentioned, they'll be following up with you in the coming days. But thank you all very much, and we'll see you on the next webinar.
Thank you very much.
Thanks, everyone.
Thank you.
Bye.
Thank
Good
you.
night.
Bye-bye.